It's a bear. Good evening. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. I know you expected me to say that, didn't you? Well, that's because that's where I'm at. And got the live Deerfield cam up. I know you expected me to say that as well, but that's just for the new folks that might happen to wander upon my channel. Interesting day, that's for sure. And the fact that anyone expected anything different as far as the CPI numbers that came in today, it's exactly what we talked about the other day, folks. Why gold and silver hasn't taken off, because the idea that we're going to head into a hyperinflationary. Well, hyperinflationary is when stuff goes up 50% a month. Whether we see that or not, I think we're in a stagflation. And again, we talked about that last week, stagflation, which is a lot different than being in a depression. Well, I don't know. I guess that depends on what position you're in. But I think we're headed into a stagflation like we've seen during the 1970s. So love this quote from Ron Paul, and we'll get into that in a moment. I don't want to kind of get too sidetracked here. Ron Paul said, and I don't know when he said this, but from the Great Depression to the stagflation of the 70s to the current economic crisis caused by the housing bubble. Now, obviously, we can tell this is 2008 now. Every economic downturn suffered by this country over the past century can be traced to the Federal Reserve policy. The Fed has followed a consistent policy of flooding the economy with easy money, leading to a misallocation of resources and an artificial boom, followed by a recession or depression when the Fed created bubble burst. And that's exactly what we got going on right now, folks. You know, since Ron Paul said this probably 2008, 2009, he talks about the housing bubble, and that's about when the housing bubble was, when the everything bubble was at the time. They thought the economic world was going to collapse. And it did, maybe, for some people, for big corporations, for some extremely wealthy people, bankers and stuff. But for the average middle-class Joe and for the average, for the poor out there who never really feel this because they're poor all the time, and I don't mean that in a bad way, they didn't really feel it. The Fed is all about saving their own asses, saving their buddies' asses, and making sure that the government that keeps them alive, which is our federal government, keeps the U.S. dollar alive in a couple different ways, legislatively and through force, through the military. Because think about it, who protects the Federal Reserve? Who protects the dollar? Well, the government does and the military does. So, the Fed has a need. It's not like a bunch of bankers that can just diss the government and diss their incredibly stupid spending that they do, and just diss the military because, again, that's who will support and protect them in the long run. So they have to keep those institutions alive, and they can't do it by raising interest rates much further. I mean, what is it now? 8.3. What did the print come in today? I don't even know. It's well over 8%. And again, if you take a look at, if this was calculated in the CPI the same way they calculated it back in the 1970s and 80s, that 8% CPI reading that you're looking at right now would probably be more realistic at double that, 14, 15, 16%. Kind of an assumption on my part, but I've heard many times anywhere between 12 and 15% is the reality of the situation if they figure the CPI the same way they did in the 80s. But Ron Paul's exactly right. 2008, instead of watching the collapse go down and learning from their lessons and learning that there had to be some pain in 2008, instead of just willy-nilly printing more money, buying assets, many of them we don't even know what they bought, okay? Because they can do it in secret. We know that already. The Fed going in, supporting markets, buying. I mean, it just, they didn't learn anything from 2008, folks. The Fed didn't learn anything. Either they didn't learn anything or they're purposely doing what they've got going on right now. A lot of people talk about the Great Reset. Well, maybe this is the Great Reset, bankrupting the whole world. But Ron Paul's exactly, they learned nothing since 2008. All they did was something I talked about the other day, is what politicians, economic people, and most government people do anyway. They doubled down on their stupid decisions. Instead of fixing their decisions, admitting they're wrong, they don't even have to admit they're wrong. Just fix what you broke. Or at least try to set it back to the way it is. They don't do that, folks. You know what they do is they double down on their stupid decisions and they make it twice as bad. But anyway, great saying by great quote by Ron Paul, and it's all about Fed-created bubbles, and that's exactly what we're in right now. As I said, in 2008, the patient was hemorrhaging, and instead of fixing the patient, they just slapped more bandage and more plasma. Plasma being cash, plasma being more money into the system. They just kept pumping the patient full of plasma and slapping more bandage on the wound instead of trying to get that wound stitched up and get the patient healthy. You got to wonder what makes these people tick. Let's take a look at spot prices. I didn't want to do the video too early this morning. I knew that there was going to be some fluctuations in the numbers. I said, wow, this is pretty crazy. Silver and gold were getting monkey hammered pretty much early before the Crimex 820 market opened up and the Globex markets were open. They got hammered in the early markets. We'll take a look at that in the 24-hour charts. And I was thinking to myself, man, if this CPI comes in pretty hot, I mean, gold and silver's got to do something. Well, one of them did. Interestingly enough, I just did the ratio, and we're back up to that stupid 85 to 1. Gold climbing to 1872. Silver still staying in that sub $21 level, but take a look at these ranges. A $50 range with gold. 1826.58 the low, and then I believe after the CPI numbers were digested by many people, the gold price shot up immediately. Look at that, almost a $50 bump there, 1826 to 1876. And silver, not so much. I mean, 21.32. I thought we might be seeing a sub $21 day this morning. But again, I was thinking to myself, let's just wait until the CPI comes in. And what I suspect was happening is that these big short positions that are in silver and probably gold as well understood yesterday and probably all this week, because, man, they can front run this stuff. They know these numbers before we do. And I'm sure that all their algos and their expensive-ass advisors and computers told them that the CPI print was going to come in pretty hot. A lot of financial companies were saying that yesterday, but they knew it was going to come in hot, and I think that's the reason we've seen gold and silver monkey hammers so much, especially silver, so that they could fill these short positions that they have, and they can make sure that they get in before these markets really start to go up. But again, let's see what happens. Never underestimate the criminality of these big commercial shorts in the market here. 21.32 the low, again 70 cents lower, and 22 the high. I guess we had a close at 21.91. We're not going to see another open until Sunday night. I'm really curious what Sunday night brings and Saturday brings. Higher gold prices, higher silver prices, higher. I just don't know. I'm in kind of a state of confusion myself, but I usually am when it comes to short term, trying to do short term predictions. It's just tough to tell. But what I do know is medium to long term, it's a rinse and repeat factor, and the new highs should be higher than the last highs. That's at least in my opinion. Platinum. Isn't it funny how platinum kind of went down before gold and silver did this last week? Hit that sub $1,000 level, and then silver and gold started to follow it. But platinum seems to have recovered here, sitting currently at 971. And but still, I thought we were looking good in the $1,000 mark. Palladium, who the hell knows what palladium is doing? It's just not too far off from the price of gold, within $50 or so. Wow. But palladium being a metal I don't understand a lot about and used in industrial stuff, and based on what the economy looks like, man, who knows what's happening in the industry. Let's take a look at the overnight charts. Again, as you can see, right before the New York Crimex markets opened at 8:20, you get that big down. Then you've got to kind of get a yo-yo. Wow, take a look at this, boom, boom, and back up here in the afternoon. And again, I suspect this is about where either the CPI numbers came out and or they were kind of digested by most of the market right here when you started to see this rise in the price of gold. Silver, not so much. But again, remember that a lot of people that are fearful of a lot of people that would jump into gold because they're fearful of sitting in cash or fearful of sitting in the market, the equities market. They're fearful. When they start going for safety and they start jumping into gold, that's when we'll start to see the prices kind of go up substantially. And maybe that's kind of what we saw this morning. Is again, they knew that the CPI print was going to be in higher. They've been monkey hammering for the last 2 weeks. CPI comes in higher than expected, and then boom, there goes the price of gold. Silver, not so much, but again, remember, gold is going to be the first metal that most people flee to when it comes to what the flight to safety, I guess you would call it. And silver being secondary. I see a lot of parallels though here. You know, if the gold to silver ratio continues to go beyond that 85 to 1, I would say that silver is a superb buy, and that gold prices are probably not going to come down, but silver is going to jump up pretty darn fast to get that gold to silver ratio more in whack. That's just my opinion. Let's take a look at by the way, I got my tooth fixed, man. As you can see, I'm not whistling when I'm talking. There we go, a little lisp, but I'm not whistling when I'm talking. So I got that done. So I'm at the dentist's office, get that done. You know, whatever, have my tooth glued back in. You know, whatever crown they call it, whatever the heck it is. $200-300 to get that done. And then, of course, I needed x-rays and all that other good stuff. But I go outside, I get ready to hop on my motorcycle, and I got a screw in my tire, flat tire. So it's just one thing after the other today. Another reason I did get the video done earlier, but I did want to wait. I could have got it done early in the morning, but just too much fluctuations in prices. Look at the hammering that the equities market's got. Dow Jones, almost 1,000 points. Oh, man, there's some scary stuff going on out there. As far as just the economy goes in general. And I'm really quite pleased at the fact that gold has done quite well considering. I mean, a lot of people are going to bag gold. Oh, it hasn't gone up 50% or 20%. But damn, it's held its own pretty damn good considering all these other things out there. And silver, not so much. But again, I just believe that silver, we've seen near our bottom here. And we're about to see some silver prices rebound upwards. I just can't see gold prices coming down from where they are right now. But again, short term, I can't tell. If they do come down, maybe they will, maybe they won't. I know that's not great advice. I don't have a crystal ball, but you know, in the event that prices of silver and gold do come down, it's just a great buying opportunity for physical. As far as that goes, again, that's my opinion. Let's move into what are we going to talk about right here? Ted Butler. This article was actually, I got this in subscription, and you're going to get it for free because Ted Butler published this on Silver Seekers on June 9th. And again, this is the exact thing that I pay for on a weekly basis. Damn it, I could have got it for free. Let's read Ted Butler's article. I got to agree with him 100%. I think you're going to find this worthwhile. Again, if you want to read it yourself, it's on silverseek.com. Just type in Eyes Wide Shut by Ted Butler. And of course, it's on his paid site too, but you can read it for free here on SilverSeek. And let me go over it real quick because it's not a super long read. Ted Butler says, Paul Krugman, the economist whose work you either love or hate, had a compelling editorial this week in the New York Times titled From the Big Short to the Big Scam, in which he compared the real estate bubble of 2006 and subsequent crash to cryptocurrencies today. Because the article is behind a subscription paywall, he's not going to link it here. The kind of reason I don't like Ted Butler's, and I didn't link Ted Butler's article here because it's behind a subscription wall. But again, it's for free, and I wanted to read this to you because not often you get to read Ted stuff for free, especially as recent as this article is done. And my purpose today is not to agree or disagree with Krugman's connection of the real estate bubble bust to cryptos, but to bring out a most astute observation he made. Krugman made the compelling case that would enable a relative handful of market participants to recognize and act upon the extreme mispricing of real estate into the 2006 bubble peak and sell short subprime mortgage derivative contracts was the belief among the majority of market participants that the real estate would not collapse. His term to describe the widespread belief at the time that real estate prices would continue to climb was the incredulity factor, and to use Krugman's own words, therein was the problem, namely, the sheer scale of the mispricing that the skeptics claimed to see. Even though there was clear evidence that the housing prices were out of line, it was hard to believe that they were that far out of line, that $6 trillion in real estate wealth would evaporate, that investors in mortgage-backed securities would lose around $1 trillion. It just didn't seem plausible that markets and the conventional wisdom saying that markets were okay could be that wrong, but they were. And Ted Butler points this out, and you remember 2008, CNBC, everyone saying everything's fine, there's no issues, we're in a great real estate market, we're in a great equities market. and people just didn't believe that the experts and that the media and that the government and our economy experts could be that wrong. But they were, as Ted Butler says here as well. They were wrong. And let's continue to read here. If you get a chance to read the entire article, I'll leave it up to you to decide if Krugman made the case between the real estate boom bust of 2006 and cryptos today. Instead, Ted Butler's going to point out here, the light bulb that went off in my head when reading his piece concerned what else? Silver. Ted Butler was saying, this brought him to think about silver. Ted Butler said, I was particularly taken with Krugman's use of the word the incredulity factor to describe what blinded the majority's opinion about the real estate back then and cryptos today, was the broad and innate belief that and then current market prices couldn't be that far from whatever levels they were trading at. When the history of markets strongly suggests that yes, indeed, there are times when markets can be extremely mispriced. While it's true, Ted says, that Krugman was using two examples of markets that were or are perceived to be extremely overpriced, that doesn't automatically exclude the presence of the I can't say this word. Oh, God. Incredulity factor in an extremely underpriced asset like silver. Simply put, silver's extremely low price over the past few decades has told, in no uncertain terms, the vast majority of the world's investors just to move along. And that's a really great point that Ted points out here, is that what we talked about that this week, we are a small, you and I, people watching this video, people that look for silver videos, people that go out and buy silver and gold bars, people that, like us, that again, understand these markets. We are not the norm. We are like maybe less than 1% of the population, if that. And Ted kind of points it out. They look at the price of silver, and the vast majority of the world's investors just move along, and that there is nothing to see here, because that's exactly what they've seen with the price of silver for years. $15, $20, knocked up, knocked back down. So let me continue here. It would defy credulity for the majority not to think that the persistent low price of silver wasn't due to ample or oversupplied market fundamentals. That's just normal collective investor behavior, okay? But even a slightly more in-depth look at silver would result in the realization that actual supply and demand fundamentals in silver are nowhere near as negative as the low price would suggest. But what Ted Butler's pointing out here, that if anyone that took a look, even a slight in-depth look like we have about how crooked the silver CRIMEX, COMEX markets are, you'd understand that. You'd understand that how rare actually silver is, not as far as what might exist above ground, but what available silver is out there. You'd understand this stuff. But you got to remember, we are less than 1% of the people out there. 99% of the people have no clue. They look at the silver price and they just take it for what it is. It's the same 99% of the people out there that look at a dollar and they don't think the dollar loses buying power. They just think that that steak costs more money, all right? They don't understand inflation. Vast majority of people don't. So this is the problem we got with silver right now and gold. And an even deeper review would raise more substantive questions concerning why, of all commodities, silver is still more than half of its non-inflation adjusted price highs of both 42 and 11 years ago. Adjusted for inflation, silver's low price is downright shocking. 100%. Again, folks, only 1% or less than 1% of the people in the world understand this. Investment world understand this, what we're talking about here. The rest of the people just look at the price of silver, they look at the price of gold, they look at the Dow, they look at all this stuff, and they understand, they don't understand. It is what it is. That's, the dollar's a dollar. Silver is that reason, for a reason. They don't see all this crooked stuff. They don't see the manipulation in the background. But again, I digress from his article here. A reasonable person, when presented with silver's extreme undervaluation compared to its actual fundamentals, would conclude something is wrong. But according to the incredulity, I'm going to catch flack for this, factor referenced by Krugman, therein lies a problem. Namely, the vast majority of reasonable people are not even looking. All right, that's very, very, exactly what we've been talking about for quite some time. Due to the deeply embedded collective sense that the current market prices can't be that far off from where they should be. Now that's very, very, God, it strikes right to the heart what I've been talking about for quite some time here. Very small percentage of the people question the markets. Very small percentage of people question what a dollar is, all right? And that's the reason we haven't seen large amounts of people move into gold and silver, because they haven't questioned the dollar. They haven't questioned why silver is at the prices that it's at. They haven't questioned why it's so cheap. But when they do, those tides will turn, believe me. I've been asked more times than I could possibly call why someone big hasn't bought silver apart from JP Morgan. The answer is elementary, because the persistent low prices has signaled it's not worth the time to investigate. Interesting. Complicating the issues in silver is that the reason most eyes and minds are closed when it comes to questioning the possibility that the persistent low price is that far off from where it should be is that the answer is particularly hard to accept. After living and breathing, and this is Ted Butler saying this, after living and breathing the intricacies of silver for close to 40 years, there's not the slightest doubt in Ted Butler's mind that the low price is a result of an ongoing manipulation by certain large traders on COMEX. And as Ted's tried to document that all along, he says, I've come to accept most will never go that deep, but broad acceptance of my take is not required. All right? So, if any marketplace is extremely mispriced, as far as Ted Butler is concerned, that silver is to the downside, then it's only a matter of time before the mispricing must come to an end. Just like housing's extreme overvaluation was rectified starting in 2006, so too will silver's extreme undervaluation be rectified ahead. The real important point here is that just like only a relative handful of market participants profited greatly from the housing bust, and he's absolutely correct, only very few did. Most people didn't expect it. Most people would have been in denial about it by going against the majority who didn't comprehend the extent of the inevitability of the housing collapse. Ted Butler says, and I have to agree with him 100%, a similar circumstance is likely to be experienced in silver, and with a special twist. All right. I'm not going to read all this because it goes into quite a long thing, but great freaking article. And again, I pay to read these articles. This is a free one on Ted Butler. It's on, again, June 9th is when it came out. You can read it for free. It's called Eyes Wide Shut by Ted Butler, June 9th, 2022. And it's being hosted by silverseek.com. It's not homework, because nobody likes homework, but I highly recommend you read it, folks. Really good reading and something to look at during the weekend. As far as zero heads, I was going to go over, if you had to summarize it in one tweet, oh my God, you couldn't do it in one tweet. But what's going on out here? Nothing new. This is worse than anyone realized. A dire outlook from Wall Street's biggest bear. Folks, we are in some serious economic trouble here, dire economic trouble. You can kind of see the writing on the wall, what's happening here. Pension funds, people's retirement accounts look like they're going to take a giant shit. So I hope a lot of you that saw this coming had planned accordingly. And as far as gold and silver goes, I think this is our year for sure, folks. I really do, but I said that before. I think I said that last year. So, never underestimate these crooks, and never underestimate the power of the printing press. But at some point, it's going to blow up in their faces. We all know it. Inflation shock not over. Rate shock is just starting, and I think we're going to see $7 gas prices. I think we're going to see much higher gas prices. Unless this idiotic foreign policy of ours is able to get back in peace with China, with Russia, with Iran. Man, we need to make peace and business with everybody, not war. And this is the real problem: is the war hawks and the leftists are in charge. There's not much difference between the two right now, apparently. Well, anyways, let's take a look at your soaring CPI crushes peak inflation narrative. Again, this is what we're going to be talking about for quite some time, peak inflation. Are we in a depression? Are we in a recession? Are we in stagflation? You know what I mean? I believe we're in a stagflation area that's not too dissimilar to what we saw in the late 70s and early 80s. What else is going on here? You know what? Not too much. I'm not going to read any more of this. It's just depressing. And you know what? I'd rather just go fishing, enjoy my weekend, keep stacking that pretty gold and silver, the stuff that's been around for 5,000 years. You're never going to wake up and hear it went bankrupt or anything like that. And relax. And you know, why do you want to relax? Whenever you get nervous about owning gold and silver, oh God, gold went down a couple bucks, 20, 50 bucks or something like that. Silver's dropped $3. Oh my God. Just look at this chart. Just look at this chart. This is since the beginning of the year, folks. Take a look at the consumer purchasing power of the consumer dollar in the average U.S. city. And the fact that we know this little point right here, it's fallen off a cliff even worse than this point I'm pointing to right down here in the corner. Man, it's bad, folks. It's not good. I don't know what to tell you. But I do think that you're not going to regret owning gold and silver. And again, that's my opinion. Let's take a look at yesterday's video, silver to $1,000. Absolutely, I said that. It was the best clickbait title I've had all year. And of course, I had to put in there was clickbait titles. And yesterday's video was more or less talk. God, there's so much clickbait on YouTube. And what I wanted to discuss with some people that haven't made YouTube videos and don't do it on a daily basis like that I do is that the YouTube encourages clickbait titles. They really they push you to do them. But again, if you're curious about that, watch yesterday's video. I talk about it in the first 10 minutes of the video. And let's see. Gary Big says, I think some fish cam mermaids pics might get, yes. Mermaid cam. I'm going to have to actually, is there a mermaid? I think there is. Silver Springs has a mermaid cam. We may have to start putting that up. Besides, much better to look at than sea cows, that's for sure. Thanks for commenting, Gary. I hope you have a good weekend. I now count how many teeth I have left. It sucks getting old. I know, Gary. Stuart Vance says that you're 100% on point. Thank you, Stuart. Appreciate that. David, can't argue with that. Why are we war? What is it good for? Absolutely nothing. By the way, that's a song. And, oh, man. That money could be spent on something much, much better. Or maybe letting you keep it. That'd even be better. Getting old is a privilege. Paul, that's very, very wise to say that. It is kind of a privilege, especially when you consider that the life expectancy at one time was much lower, and you point that out very clearly. And thanks for commenting, Paul. That was I saw that earlier today, and I said, you know what? He's right. It is a privilege getting old. Some of us never make it that far. And actually, I had a couple friends. A good kayaking friend of mine up, Jim Grossman, up in I believe in Utah, I think it was, where he lives. Died in a kayaking accident. I thought the guy was Superman, and 54 years old. But yeah, you're right. Absolutely, getting old is a privilege. 100% true. Thanks, Paul. Appreciate you mentioning that. And Kevin, I'm not quite sure who to blame, but you're right, blame her. And he says, why do I listen? I don't know why you listen, blah, blah, blah. I know exactly. I enjoy your content, makes me laugh at the end of the day. Yeah, makes me laugh too. And they want to keep, yep. Thanks for commenting, Jacob. I agree with you 100%. One worked for the other. Oh, I didn't know that. We will not see gold and silver take on until the big banks crash along with COMEX. Tough to say, but thanks for commenting, Rusty Rabbit. And you very well may be right. We're all ready for the action. Yep, that's true. And hey, Joey, what's up? Jeff says a gold crown of mine fell out a couple years, about $800. Yeah, that's about what I paid for a gold crown that I have in the back here. I still have it though. I heard gold crowns last a long time. But he glued it back on, $400 to put it back in. That's true, but at least it's gold. Teeth are a pain in the ass for sure, and it's a good thing we don't have teeth in our ass. So thanks, Electric Liquid. Oh boy, it's getting late. Thank God it's Friday. I'm ready to just kind of call it quits for a couple days and refresh. Walmart does sell silver. Interesting. I didn't know that. Do they? Really? I don't think so. Interesting. If you do, put it up. It wouldn't surprise me if Walmart sells everything. And Invisible Stacker says silver will hit 1,000 when sold, and candy bar costs $204. Let's do the comparison right now. Silver is around $20, and gold is around, 20. Say $20. Let's just round it down to $20. And a candy bar is $2. That's about 10%. So if silver was $1,000, theoretically it would still put a candy bar at $100 to Invisible Stacker. So I think you overshot it by 200 just based on the ratio, but I could be wrong. Thanks for commenting. It's always nice to see your comment out there. 24 Karat says, how about this? Alfred E. Newman becomes speculative short. Opens Florida coin shop in the middle of, not many of you know this, but I look just like Alfred E. Newman. Especially without the tooth yesterday. Hey, thanks. I appreciate that, 24. I hope you have a nice weekend. 5K. Put the tooth under my pillow and a $20 gold piece will appear. Oh, thank you, Mark Hall. Hope you all, tree climber, Mike Maloney, hope you have a great weekend. Bike says, I can't tell you have a tooth missing. You must be really self-conscious. Oh, I'm not really self-conscious. Actually, if you ever saw me in person, you'll realize by the way I dress and my natural appearances, I'm far from self-conscious. My girlfriend's embarrassed I go out the way I do sometimes. So no, not at all. I could hear it myself. Every time I was talking, I could feel air shooting between my teeth, but not self-conscious. That's just not me. And half a tooth going down a slide head first. Actually, I fell and chipped half my tooth one time when I was a little kid. Half a tooth. Thanks, Mike. Hope you have a great weekend, sir. Appreciate you commenting again. Tree climber, alleged Warren Buffett, yes, him is buying 1.2 billion ounces of silver through BOA. I'd like to hear more about that. If you got a link to any stories about that, let me know, tree climber. And the Scourge says, forget titles, just put bikini-clad girls holding 10-ounce bars in thumbnails. I'm not going to argue with that. If you got any teenage, what does it say? Teenage bikini-clad girls? No, bikini-clad girls. Good thing it wasn't teenage action. I think about that. Get you in trouble here. Bikini-clad girls holding 10-ounce bars. Don't have any pictures of that, and I'm not even going to comment on that. Thanks for commenting, Scourge. I appreciate it. Just saying you're going to get me in trouble here. All I want for Christmas is my, me too, my front tooth. Thank you, Silas. I appreciate that. The Scourge says, sorry for the tooth. Wow, and advertising a huge gold tooth up front. I thought about that, plating my tooth, but no, I couldn't even imagine what that would cost. You know what they get for caps now? It's like $1,000 each, man. I can't even imagine what one would cost in gold. Hey, thanks, George. I appreciate you watching. Charles Wilson. Chainsaw, JP, Welco, Silver Liner, all you folks, I hope you have a great weekend. Do something cool. Go fishing, ride your motorbikes, go shooting, whatever it is that makes you happy. And as far as what the best deals out there, gosh darn it, it's the same shit that I told you yesterday, same stuff I told you last week, same stuff I told you 2 months ago, 3 months ago. So I'm not even going to say it. It's bars. It's bars, damn it. Bars. Don't buy the coins. Cheapest thing you can buy out there, and gold and silver. And as you know, here's my advertising bit. If you live in South Florida, of course I don't do any shipping, so if you don't live in South Florida, unfortunately, folks, I can't deal with you unless you can physically come into my store and buy and sell. We are a brick and mortar, and if you live in South Florida, I'm the guy to come see, and I advertise to beat JM, SD, and Atmex Bullion on their reasonably priced products, which all products should be reasonably priced. I'm not going to sell you overpriced shiny shit either. So if you're looking to buy gold or silver, I'm the guy to see, and I'm here 10 to 4, Mondays through Fridays, same location since 1995 here in South Florida. And please come on in. We'd love to educate you and get you started on your way. And that's really about it, folks. The best thing I can say here is think for yourself and question authority, and close this video out. And let's get to having some fun and enjoying the weekend. Hey, thanks for watching. Have yourself a great weekend, and I'll talk to you on Monday. This is Brian Kuzma with Commercial Rare Coins and Precious Metals. Again, if you live in South Florida, we're open 10 to 4 Mondays through Fridays. Call us or come in anytime between 10 to 4 Mondays through Fridays. And again, call us at 954-493-8811. I'm going to call it right now because I'm tired. I'm ready just to relax, grab a bite to eat, and call it a night. Thanks again, and talk to you on Monday. Bye now.